Good morning, traders. Welcome to today's market review. Today is May 9th, 2014. Today is Friday. It's been an exciting week in the markets, especially yesterday. There have been some really nice moves, and we'll discuss it now. But before we do, let's just go into today's economic calendar. So at 3:30 today, we have some major news coming out of the Canadian dollar, unemployment change and unemployment rate. This should move the Canadian dollar. The Canadian dollar's moved the most this week, giving up 148 pips this week. So it has been retracing nicely over the past couple of weeks after taking a huge upturn. So I expect to see some more volatility in the Canadian dollar. Just at 5 o'clock later today, we have a GDP number. Not so sure if, not so convinced it'll be such a major number. But if you do have some GBP positions, you might want to take a look into it and make sure that they're safe, okay? Because the GBP has been trading quite nicely, has been moving on the upside nicely over the past year, okay? So just let's go over the basics. Just to go into the euro first. The euro made this double top yesterday, okay? Challenged this upper level again. Really not breaking above this 139.34 area. We saw a double top yesterday. If we look at a 4-hour chart, okay, it's just concentrate on our area, which is right here. Okay, we saw this coming in. If you're lucky enough to anticipate this this drop, okay, you would have noticed that we had a nice opportunity to go short. Because this thing really didn't show some resilience. Two things happened all at the same time. Number one, we had news coming out of Euro yesterday. Draghi was speaking, and we also had Janet Yellen from the U.S. dollar, from the U.S. speaking. So both these powers, there's this power struggle yesterday, and as these things happen with the economic news, we look at the graph and we see some sort of threshold that's being met all at the same time. So in this instance, we had a huge opportunity yesterday to really get involved here at these levels and to short. Okay, I actually got into a little bit of a position up here, slowly easing into the position, and then I closed my position about later in the day yesterday at around here. Could have held some more, okay, but got jiggled out. But in any event, it's really important to keep in mind that when the economic news correlates with some threshold that's technical, it really lends itself to someone knows something about something. And you could see it both in the graph and see it both in what's going on with the fundamental news, and that's really noteworthy. Okay. Number two, let's just go into the U.S. dollar CAD. Major news again coming out today. If we look at a 8-hour chart, since the beginning of the year, we really rallied from all the way of 106 to 112. You know, we took a nice aggressive move. The dollar was getting weaker, and then we just faltered at about here. Okay, let's just bring out the pen. This became support, okay, and then resistance, all at the same time. And then we saw some resistance here after breaking itself, not holding itself at its lower channel, okay, and then once we fell, number one here, number two, we fell here. This was a clear short. So with the Canadian dollar coming out with big news today, I would really look for either an anticipated bounce or continued sell-off. But it's been beaten up quite nicely. You know, I don't know if I could call it nicely, but it's been beaten up quite harsh since the beginning of the year, almost making a full circle. So, you know, there's still more room on the downside to hit the 107 level, 107 level-ish area. So just bear it in mind, keep it on the radar today as a possible trade. Looking at the Aussie USD, we had a nice rally yesterday of about 70 pips. Really doing very well for the Aussie USD. If you look at an 8-hour chart, we'll see that, if you remember, we had this huge rally since the end of January. Like we said, the dollar's getting weaker. and then we traded in this channel. We retraced a little bit. This was a previous resistance on a longer time frame, and we traded in this range for a while. We consolidated. I had actually mentioned that we would be consolidating at this area after making these huge moves up and retracement. And then once we saw some strength, what I like to see is exactly like this. We broke out higher and we closed higher. Okay, considering that this is resistance at this level. Okay, we broke out higher. Okay, which is right here, and then we never saw it come back. We challenged it on the downside, but it nicely made a nice move up. So, I would look for some positive assurance if it does hit this trend line, to see if it could still hold it, and then to anticipate that we would challenge these upper levels again. So the Aussie USD, definitely a great trade, definitely worthwhile having on the radar. Moving along to the GBP USD, again, the GBP USD is very, very strong, and we've been saying this for the past year. Okay, it's been rallying since last summer. Okay, from a level of 148, and today we're hovering at about 6,900, just shy of 7,000, 1.7. Excuse me. So these are major levels for the GBP USD. We still have a way to go on the upside, of course, but this thing doesn't want to give up. Okay, it really wants to rally on the upside, and finding every reason to do so. So just be careful. Like I said, if you are going to short it on these retracements, just to have a tight stop loss. Okay, I would actually recommend that you didn't. That you actually bought the retracements, because you'd have a better percentage play in your favor. Okay, so that's the GBP USD. Moving along to the, we spoke about the Aussie CAD. Okay, we spoke about the Aussie CAD, the US CAD. Okay, we're going to just go into the Dow. Just briefly yesterday, the Dow had a beautiful rally towards the morning, and at about 1 o'clock in the afternoon Eastern time, what had happened? The market topped off. And as the market tops off on its highs, guess what happened next? A big sell-off, hit 16,625, and then boom, sold right off. So there's tremendous resistance. It's not worrying me that this is happening. Okay, I would have anticipated this tremendous resistance on these levels, because if you look, we've gone from 6,500 in March of 2009 to about 16,550. So that's a move of about 10,000 points in the past 5 years. So it has this beautiful rally. It's been trading very nicely this past year, with some tremendous rallies on the upside, and we are consolidating. So I understand rationally why we are having these resistance being so aggressive at these levels, but again, I'm not sure that this is a retracement or a sign that things are getting weaker. I would like to see some sort of confirmation from the stocks, from the major stocks in the U.S., like the financials, the conglomerates, some of the basic, most central major economic stocks in the States, confirming some sort of retracement, and then I would consider maybe looking for a short. But at this time, I'm not even thinking about a short on this, because this thing has been so strong, and it could continue. There's nothing to stop it from going to 17,000. I believe one analyst wanted to go to 18,000 by the end of next year. So again, keep it on your radar. See how it's trading vis-a-vis the gold. Gold yesterday was actually kind of quiet. Didn't do much, consolidated a little bit. I believe we will consolidate at these levels under 1290, but they've been trading against each other. The Dow Jones and the gold have been in an inverse relationship. We've discussed this before. This is Fred Razak at CMTrading. I want to wish you guys a beautiful weekend, and we'll see you next week. Thank you.